there aren't too many other cues that the markets are providing us. But talking about fund flows, because this is significant for equities, for debt, and of course the large India piece, we have Cameron Brandt, Director of Research of EPFR, joining in. Cameron, good morning. Thank you very much for taking the time out to talk to us. Let's start with where money is going. Is it going into US equities? Is it going into emerging markets? Where is the tide flowing?
Fund flows, both equity and debt, are very US centric over the past 2 weeks. Really, those and some money into the diversified global equity funds. There's still some money coming in to dedicated China and India funds, but that's increasingly local. And in the case of India, we're seeing the redemptions from diversified global emerging markets funds begin to reach levels where their selling of Indian equity is getting close to canceling out the inflows to the dedicated funds.
Cameron, good morning from here. Where is it that you reckon that flows, not just over the last 1 month, because we know that the last 15 days, I think China dedicated funds also pulled off some money. Just trying to understand within that EM landscape, where is it that which are the markets which are seeing the max outflows? And I know you don't get into a predictive mode per se because you speak about data, but I'm just trying to understand what's your guess about what happens post the Fed cut?
I think post the Fed cut, some people who have stayed out, as they often do during the summer, will come back and start taking a closer look. At the moment, the segment of the emerging markets universe that is struggling the most is Latin America, a fairly toxic combination for them of doubts about Chinese growth, high US interest rates, unfortunate uptick in inflation, and pressure on the ESG theme, which certainly last year and in 2022 was actually pretty supportive of Latin America.
Right. Cameron, I know it's tough for you to call the outlook on fund flows, but before we go into debt as an asset class, I want to get an understanding from you whether you're seeing foreign money or just significant wealth flowing into gold. And what is that trend playing out like? Because gold is at record levels and it's at a very good run all through 2024.
As you say, gold has been very popular, but people seeking exposure have not largely gone looking for that exposure in the fund universe. We have started to see an uptick in flows into gold funds over the past couple of months, but and I've said this before, I've been somewhat surprised at how little gold funds have taken in, given sort of the uncertain balance between inflation and interest rates, certainly over the past 3 years.
Very lastly from me, would you be able to tell us how much flows are coming into debt, and is Indian debt preferred over other debt offerings from other countries in the emerging market pack?
So solid amounts are coming into debt funds, but again, it's very developed market centric. US bond funds have been by far the most popular destination for fixed income investors this year. Emerging markets funds have generally struggled. That said, we are starting to see a modest pickup in flows to dedicated India bond funds and seeing India's weighting beginning to move up in the diversified funds, obviously a function of the recent inclusions in key indexes.
Okay, Cameron, at the start of the month, or at least in the month of August, right, on the equity side, I just want to move the conversation back to equities before we wrap up. India and China were getting a pass and money was flowing into Japan. As you mentioned, not just on the debt side, on the equity side as well, on the EM side, I believe the India weightage is now the closest that it has been to China that it has ever been. So if the EM flows were to return with a bang post the rate cuts, could India, despite its valuations, see a larger flow from passive funds? I'm not asking you to predict what individual managers could do, but on the passive side, could the flows be larger?
Obviously, if there's sort of a broad re-rating of emerging markets thanks to lower U.S. interest rates, then India is going to benefit. Its average allocation among the GEM funds we track is at a record high. So I think no doubt that would be very supportive of India. At the moment, I think a couple of issues are weighing on the dedicated side. Indian equities were very popular with Japanese investors before the events at the beginning of the month. And there's a certain amount of concern about whether winding up of carry trades will sweep Indian assets up. And there's also still a certain amount of uncertainty about what the new tax regime for investors will mean, including mutual fund investors. So I think the answer to your question is if the brakes come off on diversified funds, it'll give you a nice bump. But the appetite for dedicated exposure, while it's still there, definitely seems to be at a lower ebb than it has been, certainly in the first half of this year and all of last year.
Right. Thank you very much, Cameron. Great talking to you. We'll touch base again, hopefully early next month, to get some more perspective on where that flows are going or headed for.